What's up, guys? This is Carter Thomas with Coin Mastery TV. We are back in action. Welcome back. Thank you so much for joining in. And if you're ready to dominate and talk about some crypto and some good things, make sure you hit that thumbs up button on that video. Do something on iTunes on the podcast. I don't know what you do. I guess leave a review or whatever. Thanks for hanging in there. Had a really great 2 weeks. Got married, went down to Mexico, and generally just disconnected, unplugged. Really exciting times in life. And now we're back. Now we are here and we are going to rock it out for a few weeks at least. Then I got some more travel to do end of the month. But until then, let's talk about crypto. Let's talk about Bitcoin. Let's talk about what's going on in the market, as it has been it's kind of a weird time, right? It's like the price is doing one thing, seemingly a lot of action doing a lot of other things. We're just going to walk through that, give you my take on it. It's always interesting when to get a clear set of eyes, both personally and from somebody else. So hopefully I can provide that for you guys. Not most importantly, one thing. Thank you guys. Look at this. YouTube hooked it up with this 100,000 subscriber plaque. I don't know if you can see that. Right. So it's obviously thanks YouTube for that. But more importantly, thanks you guys. Without that, that wouldn't really be possible. So it's been a fun journey. We're going to keep doing these. Maybe not daily because it's just difficult to do, but certainly we're going to keep doing this as things progress in this market. So that's enough about me. It's enough about updates. Let's talk about what you really care about, which is this fun little curve. So for anybody listening, we are looking at the Bitcoin 1 day. I'm looking at BitMEX for now. We'll switch around, but BitMEX seems to be a good place to start usually, especially down here when you're seeing all these wicks, all this kind of loose Bart Simpson stuff. And you can see, or maybe if you're listening, I've drawn some levels. If you're watching on YouTube, you can see over here on the sides, we've got a couple different levels. I'm on the 1 day, so I'm going to scroll in. Now, these levels are purely historical price, areas. It doesn't mean that these are predictions. It doesn't mean that this is where I think it's going to go. I drew these lines purely as a way to give reference points to where we've been. So you can see there's one at 58.80, which is right this February bottom. There's one at 54.6, which is the November bottom, so to speak. We got 4,300, which is right around this kind of consolidation area that lasted almost 2 months, summer basically. And then 3,400, which is when you get down to this other price kind of resistance area. So I'm just drawing these lines there just as my own point of reference. And then you can see on top here, this blue line, which is the 6782, which is the most recent resistance level, which also has been support previously. Now, the one thing to keep in mind is that if you just looked at this chart objectively, especially if you zoomed out, it's a pretty biased chart. That's why looking at things like colors, that's why having a lot of this drawn into the chart can kind of, it makes it look pretty bearish overall. And that's not to try to influence anybody or change anyone's mind or anything, but I think it's just important to be aware of that. And if you're doing this in a kind of proper way, you'd probably want to have less of this on the chart, make it black and white, do all that. But that's for another time. I think it's just more of an indicator, no pun intended, of what you should be looking at, not only just in terms of what's on the price. Now, if we zoom in, let's go into the 1 hour just to get pretty granular here. And you could see what's in these that we've kind of had a period where we dropped down into this buy and sell zone and we're just bouncing around. Now, if you didn't see on Twitter, over my trip down to Mexico, I reread this book, Reminiscence of a Stock Operator, which I read a couple of years ago. I really wish I had reread it earlier. But he talks a lot about, or I should say he describes a lot about these zones. He calls these the paths of least resistance, and how trading, if you are going to trade between these important levels, is a really good way to balance out your trading style. Now, if you're in a long-term investor, holder, whatever, this is more about, bigger levels. But when you're getting granular, it's really helpful to draw either on the chart or just mentally know where a lot of these natural support and resistance levels are. The first place you do that is you look at historical levels. So that's why you have this blue line as the top and you have this red line as the bottom. This zone, you really don't want to do much when you're in the middle. You want to wait until you're on the top or the bottom of these zones. And then more importantly, you want to wait until you see some sort of major movement away from that zone. That's typically how you're going to get a high probability trade. So for anybody who's thinking about that, stay out of no man's land. And more importantly, don't zoom in to try to create a new zone, right? Like don't try to create something out of nothing because you're just dying to trade. Another way you can do that is if you go to the volume profile in TradingView. Now this is a premium indicator. You have to have a premium account, but I'm going to move my face up here. And you can see, depending on the time frame you're at, you can see these different volume profiles. It shows you where there's the most volume. That's getting more technical into the trading style. But if we just go into what happened most recently, you can see that there's a lot of volume that happened right at the inside this zone in recent history, which means that it shows you where there might be gaps where price can move very quickly, and then also where there's a lot of sell and buy volume historically, which means where you're going to have a lot of liquidity, most broadly speaking. So what does that mean for you? What does that mean in terms of where the price is? Well, the first thing it means is we are in the middle of what I would consider to be one of these path of least resistance zones. This is really not a good place to be making any sort of moves. If you're going to make a move, you may want to wait until it gets down to like 61.50, right? You really want to watch this because there's been some previous consolidation here, and then you're seeing these double dips down to 58. That would be another interesting place to potentially go long. And if it breaks through those levels, then you're looking at, moving yourself into the next kind of block of a path of least resistance zone and starting to trade in there. But I don't think that you really want to mess around until we're either above 68 or down to 6,100 or even to 58 until you start getting serious about trying to make an entry or anything like that. I definitely do not think that this is the place to go like, oh, hey, I'm going to be holding on to Bitcoin for the next 10 years. I'm just going to start buying in, because there's no really good reason, which is what we're going to talk about in a second here with more fundamental analysis and macro stuff. But from a pure trading standpoint, I think that you just want to wait and see a little bit more until you're on the cusp of one of these areas so that you're in a higher probability situation. So like he says in that book, he made all his money, or made vast majority of his money when he was sitting, not when he was trading, which I think is very good advice. But importantly to remember, none of this is professional advice. This is just my opinion, just some random dude on the internet. So take it for what it's worth. We'll keep poking at this. We'll talk about some other coins as we move, some of the bigger coins especially. But that's what I'm seeing. So let's go to CoinMarketCap. Let's flip it over. The big news, so the market cap's kind of been bouncing around. What's really interesting to me is that the market cap is 250 million. And this is this, like, I don't know exactly, but sometime in November, this is basically the same, but with all the forks, with all the new coins, with all the new ICOs and things, this market cap is, it's the same as when we're going up, and it was much more concentrated. There was the price action on fewer coins was very, very different, right? The dominance was very different back then. It was much higher. And so when you look at the overall market and you look at what this market cap means, you also want to look at what the profile of the market is. One thing, as somebody who has not really been paying attention to the hour to by hour details, is watching how much volume is going into Tether each day. So you can see that it's number 2. Now, if you go to some of these historical snapshots, you go up the tools, you can go to historical snapshots. you can see that Tether bounces between 2 and like, I don't know, maybe 6 or 7, depending on what part of the cycle we're in. And typically the more of a bearish cycle, the more it goes into Tether, the more people are just trading it out. A good rule of thumb, I shouldn't say that, a loose theory that I would not bank any long-term decisions on is watching where Tether stays, right? And then also as what's it called? True USD, as that gets momentum, as that gets more volume, where that's moving along in terms of volume. What that doesn't necessarily mean bull versus bear. It more means traders versus non-traders. That's because I don't think a lot of money necessarily leaves crypto as much as it just goes on the sidelines waiting to come back in. And I think that that's a really important distinction to make, just as somebody who's, been watching without really being very active in the last couple of weeks in the crypto markets. The other thing that I've noticed is, so Tron, they had their mainnet launch, and then they went, their futures are listed on BitMEX, which allows people to not only short, but short with leverage. And so EOS had that as well. Tron is the next. We'll see who else is there. You got Ripple and a few others that you could do that with. And it's super interesting to watch how that affects the price and the volatility when all of a sudden you're able to short a lot of these coins. And I think that to me is one of the biggest takeaways that I'm seeing in crypto right now. And one of the reasons why I'm still kind of like, I'm not dying to jump back in. And I mean, I've still, like we talked about, I've got different buckets for you got your long-term holdings, you've got your trading account, and then you've got your sideline kind of fiat money. And so all those have different strategies. But in terms of going long, it's really hard for me to make any big bets on altcoin price until it's very easy to go long or short on everything. When you can just go long on all these coins, you're really just betting on either the technology exploding very quickly, you're betting on the hype cycle, which is marketing. It's not really a true market because people can't, the leverage can't go both ways. So I think that's just something to really keep in mind. And when you're watching things like Tron and EOS, look at it from a market standpoint. Look at it from the fundamentals of a market, the mechanics of a market, not just do people like it? Are people hating on it? Is it FUD? Is it tech? How much was their budget? Blah, blah, blah. That's going to be a big deal. And you're going to see more and more coins that go through that process, which hopefully will help with price discovery and it'll help with really reconciling that innovation to price curve, which we talked about many, many times. Overall, everything else, there's just not a whole lot that's very exciting, in my opinion, from a price standpoint on the altcoin market. Everything is still moving in succession to what Bitcoin does. Not even with the other coin. I mean, Bitcoin is really leading the charge now in terms of price action, mostly, in my opinion, because of the liquidity. So I think that's one thing you really got to keep in mind is that if you are going to trade or buy into any of these altcoins, in my opinion, I think that it's really just a game of speculation. It's always been that for the most part, but right now it's even more so because it's so low liquidity, and it's really all about the game theory of playing against other people. Now, that's, in my opinion, not a very high probability game to play. Therefore, I'm happy just watching this on the sidelines and going from there. We'll talk more about that as the weeks go on and as things change, as news comes out. But that's the way I'm looking at it right now. I'm just the ability to buy into a lot of, you can buy maybe like $500 worth of some of these coins, which is a lot of money to some people. But when you can't buy a lot of these coins without moving the price, and you can't get out of a lot of coins with a lot of money without moving the price, that keeps certain people out of those coins. Therefore, it's not a true representation of the market. It's more speculative than actual market making. So we'll talk about that more, but right now it's really more, I don't know, looking at Bitcoin seems to be a better use of time right now. A few pieces of news that I thought were noteworthy. The first is that the Cboe is reapplying for the ETF. Now remember, I think it was VanEck, right? Is that VanEck? Am I getting that right? And what was the other one? I can't remember the other one. We talked about this like a month ago. These two companies coming together, Solidex, that's what it is, to create ETF. And hopefully they're going to get approved this time. The reason why they weren't approved in the past, a lot of it was because it was very difficult to regulate the market with overseas markets, right? No one knew what was going on with trading overseas. And also with things like insurance or custodial services is another way to kind of think about that. Now that we are starting to see Coinbase having custodial services, we're starting to see this stuff become more accepted and money coming into the custodial services, legitimizing it all. That may make the ETF even more exciting. In my opinion, that if there was an ETF that went live that was not just a synthetic ETF, I mean, maybe if it was even a synthetic ETF, but a mainstream ETF that was listed on the New York Stock Exchange that people could buy in their trading accounts, that would be a very bullish indicator for Bitcoin. Even at these prices, I think that an ETF going live would be very, very exciting for the long-term success of the Bitcoin. Now, a lot of that is going to be how that ETF gets integrated into funds, into places like Vanguard or Wealthfront or Schwab or TD Ameritrade. Some of the bigger BlackRock, the biggest ETF providers out there. But this is interesting. And I think that there's going to be, we're going to find out in about a month and a half. I think it's like August 30th is when we find out. So keep an eye on this. I know we've seen this come through. It's got shot down. But this time I think we might have some more, what do you call it? Firepower. We might have some, they might be able to walk through the ability or the compliance a lot more easily. Other thing, Augur released was it yesterday, 2 days ago? Now this is not a, what do you call it? I'm not trying to pitch Augur at all. But what I am interested in is that this is a new use case that requires blockchain to be successful. I gave a talk at a conference, I don't know, maybe a month ago. Hopefully I'm going to get a video of this soon. I can share it with you guys, where I talked about how you're going to time the next like huge crypto bubble. And the thesis of that talk is that you really just got to wait until see where the money goes, right? And there's two ways to look at that. The first is a blockchain company that becomes very profitable because of a blockchain, right? There are plenty of companies that are being built that you can see on CoinMarketCap. The other is that it's an existing company that becomes more profitable by using a blockchain or a distributed ledger, whatever. Either way, it's got to come down to money, at least in terms of investable bubbles. It always comes down to money. Tech and scale and network size, that's all good, but the profits is when you get valuations which become excessive, which drives bubbles. So Augur is interesting in my opinion because not only is it proving that you can build a blockchain company, but there's a potential for this to be profitable because of things like sports betting. We think things like prediction markets, gambling is just so massive. And if that becomes profitable, this opens up a new window. It doesn't begin the next cycle necessarily, but it starts to get the momentum that would start the next cycle, because then you see like 10 new prediction market blockchain companies come up the same way. Once Binance showed that it was profitable, you see all these new exchange tokens coming out. This same sort of thing happens with all the different niche markets, with all the sideload parts of this. So I think that this is really interesting. I have no idea if Augur is going to succeed. From what I can tell, the UX is pretty bad. You got to download the entire blockchain on your computer. It's not even they don't even have a Mac version yet. So they got a long way to go from a user standpoint, but it's something, it's worth watching. This is very, very early days in what I would consider the next big part of crypto for people like yourself, people who have money, who want to invest in something that's going to appreciate very, very rapidly at a premium valuation, which essentially gets you massive returns very quickly. Premium returns, right? Seeking alpha returns, beating the market, all that sort of thing. So keep an eye on that. I own a little bit of Augur, but I'm not like, definitely not trying to shill that. Okay, last is, or second to last, I should say. So Palladium, which is a company in Malta, they're joining with Bittrex. They're trying to release I believe it's a new exchange or just a new company. But either way, what I thought was really interesting is this idea of the ICCO, the initial convertible coin offering. I think this is worth keeping an eye on, because one thing that's going to happen in the next 12 months is that you're going to see a lot of companies that, we don't know if the money's going to go into equity of the company or if it's going to go into the token of the company. That has not been figured out yet. And I'm really interested to see if this new corporate structure, if this actually creates a viable model for that. And so what I mean is, let's say you created a company on the blockchain or whatever, and you raise $5 million for it, but you don't release a token. It's just equity in the company. You build it up, but the whole thing is going to be a blockchain company. And then once you hit a certain milestone, you can convert that equity into a token, which will allow you to put it on the market. You can raise more money. You can do whatever, but it's like a different way to do an IPO, or maybe it's in tandem with an IPO, which would just be on the equity side with stocks and all that. This, I think, is going to be super interesting to watch as the market and as this whole kind of governance of this world unfolds, because that's got to get figured out at some point pretty soon, especially with security tokens rolling out. How do you raise money for the company, preserve the equity value, and then also have the token value? How do you reconcile those two valuations? How do you maintain the integrity between the two so that they work in parallel with each other? And we'll see. I think what's happening with Palladium and Bittrex in Malta, this is going to be an interesting study in how it works out. I think as security tokens come out, this is also going to be a very interesting corporate model. But it begs the question, is the next big money-making opportunity going to be in equity of companies, or is it going to be in the tokens? If Augur became a publicly traded company, is it better to go and buy stock in Augur, or is it better to own Augur tokens? Nobody knows that yet. We're trying to figure that out. And I think that this is going to help pave the way for that. So something to keep in mind. But that's a question that I'm definitely keeping an eye on. I think that that's going to be, because otherwise what's going to happen, the reason why it's important is that if you're just focused on the tokens, if you're just focused on how the crypto markets have been for the last 5 years, you may miss a lot of opportunities that just show up right in front of you. But if you're focused on tokens, you could totally miss that opportunity. That's just how the brain works. If you're thinking about one thing, you tend to see that thing. Or there's some I can't remember. There's like 10 times as many connections between the brain to the eyes as there are from the eyes to the brain. Meaning, if the brain already knows what it's looking for, it seeks those things out in what you pick up. Versus like people think that you see everything and you're objectively processing it. Like you're already filtering 10 times as much stuff by what you believe is true, which is why it's good to know this stuff, or at least be open to it, in my opinion. Now, last, I thought that this was just like, I'm not trying to put this picture up for like any sort of, hey, look at me. For anybody who's listening on the podcast, it's a picture of my laptop in a hotel room, in Mexico where I was checking out the S&P 500. And the reason why I bring this up is because when I was gone for the last, I don't know how long it's been, 2 weeks, 3 weeks, something like that, you really kind of disconnect. You really stop thinking about your day to day, and it really kind of opens you up to all this new energy. And one thing that I've talked about since I started this channel, but really since I've started any of my companies, is I'm always trying to outsource myself, which is ironic because, you know, I do daily videos, or I've done daily videos for a long time, which is impossible to outsource. But when it comes to the money-making side of the business of all my companies, how do I outsource this? How do I build something that runs without me, or that I can just manage and not have to operate? That's really important to me. And I think when I was gone, and many of you know, I've been focused a lot on learning how to trade, on just getting into the trading world. And I've been very fortunate in that it's done well for the past 6 months. You know, I've not only with crypto, but with futures and with foreign exchange markets, it's been profitable. But it hasn't necessarily been like, hey, I'm Paul Tudor Jones here, you know, see you later. I mean, I'm keeping it pretty small potatoes. I'm trying to keep it pretty slow. But what I realized is that it sucks up so much brain power, and that even if you have everything all set up, if you still have to go in and make the decision on where you're going to enter, where you're going to exit, how does it look, whatever, like, you know, we all do for the most part every day on these markets, it still requires you. And that's not necessarily a bad thing, but I know for myself, I'm always trying to find a way to create an environment where it doesn't necessarily have to rely on me. And sometimes that happens when you go and you put yourself in a position where you can't do anything. And so one thing that I really took away from that trip is that I came back and I was like, man, I'm looking at these trading setups on all these different markets, and I have a very, very good idea of when to enter, when to exit, blah, blah, blah. But if I still have to be the one who presses the button, if I still have to think about this every single moment of every single day, like, I just can't do that. I can't live my life. It sucks up all my energy. And so it really drove home this idea of creating systems that I can outsource, whether that be algorithmically, whether that be through very strict rules that maybe I still have to execute, but at least it's very, very clear in that sense. But it really opened my eyes up to how much of this business is about one person sitting there staring at a computer screen, trying to make a decision, even when you know it's right or wrong, having that kind of mental block in front of you. So the reason why I'm sharing this is because if you're out there, especially if you're young and you've never really built a business, or you want to build a business, or if you have a job, anyway, if you could be 70 years old, I don't know. Ask yourself that question. How can you take what you're doing today and build it into a system that either is easier for you to operate, or you just have to manage it each day, or you can automate it entirely, which is much harder to do in finance. It's actually one of the hardest things to do, build like a quant algorithm, but it's possible. How can you do that if it's interesting to you? Because then you create an asset, you create a system that you are then just managing. And that's the name of the game in building wealth. And I came back, and that's what I realized. I realized that I've been looking at these markets, whether it be Bitcoin or altcoins or futures or Forex or whatever. And I need to have a more bulletproof system. Now, how do you create a system? Well, the first is you create rules. The first rule can be, hey, every time it dips this amount, I buy this much. These are just examples. I'm not saying you got to do this. Second might be like, hey, when this moving average crosses this, I buy this way, I sell. Whatever, like when my portfolio gets overweight in this, I rebalance to this, or whatever your rules are, but create those rules, create a system, and then always ask yourself, how can I automate this? How can I make this better? How can I implement tools or strategies or something on top of that? Because if you don't do that, and you're trying to make money over the long term, like as an active market participant, it's going to be very, very difficult. And I actually think that passive investing is going to have a very difficult 10-year. I think that's a different conversation. I think understanding how to actively manage your money is going to be a very profitable skill over the next couple of years. And that's why I think that this is an important question. But I'm not saying you got to go on vacation or anything to do this. I know that not everybody's in a position to do that. Some people have jobs. Many people have families. Some people are just, you're working all the time. I mean, I get it. But I do think that if you could only work 2 hours a day or even 2 hours a week, what would you spend those 2 hours doing? Right? That's a really powerful question to ask yourself, especially if you really want to make an impact in the market, in your portfolio. You'll end up probably making better decisions in outsourcing a lot of the stuff that may be causing a lot of things to not stay profitable. We'll keep hitting on this idea because it's something I came back and I was just like, man, how can I, there's got to be a better way to doing this. And it's something that I'm really, really, really interested in exploring, which we'll do on this channel. So I think that's it. I guess in summary, we're in no man's land right now with Bitcoin, pending no big, crazy news that comes out. Altcoins, really just watching anything new that comes out that has any sign of potential profitability, and then exploring the systems, the rules, the trading, and then how do you package, productize, how do you implement rules, systems, signals into your day-to-day so that you are not spending hours and hours looking at charts. Even if you like doing it, the actual trading is good to often automate and outsource. Guys, it's great to be back. Thank you so much. Make sure you hit that thumbs up button if you haven't already. If you're new, subscribe, join the crew. And then I will see you guys next time. All right. Good to be back. Peace out, guys.